Welcome to another episode of How It Works, where we break down complex concepts into easy-to-understand terms. Today, we're exploring the United States Federal Reserve, often referred to as the Fed, a key institution in finance and economics. In this video, we'll discuss the Federal Reserve's history, structure, functions, and impact on the U.S. economy. Let's get started. The Federal Reserve was created in 1913 with the passage of the Federal Reserve Act. The primary motivation behind its establishment was to address the financial instability that plagued the U.S. economy during the late 19th and early 20th centuries, characterized by frequent banking panics and bank runs. By creating a central banking system, lawmakers aimed to provide the country with a stable monetary and financial foundation. The Federal Reserve System consists of several components, each with its own unique responsibilities. The first is the Board of Governors. The Board of Governors is the main governing body of the Federal Reserve System, comprised of 7 members appointed by the President of the United States and confirmed by the Senate. The board is responsible for setting monetary policy, supervising and regulating banks, and overseeing the operations of the Federal Reserve System. Next are the Federal Reserve Banks. The United States is divided into 12 Federal Reserve districts, each with its own Federal Reserve Bank. These banks serve as the operating arms of the central banking system, providing financial services to depository institutions, conducting economic research, and implementing monetary policy decisions made by the Board of Governors. The Federal Open Market Committee, or FOMC, is the monetary policy-making body of the Federal Reserve, consisting of the 7 members of the Board of Governors and the 12 Reserve Bank presidents, with only 5 of the latter having voting rights at any given time. The FOMC meets regularly to assess economic conditions and determine the appropriate stance of monetary policy. Lastly, we have the member banks. Thousands of commercial banks across the United States are members of the Federal Reserve System, holding stock in their respective Federal Reserve Bank. These banks are subject to the supervision and regulation of the Federal Reserve and have access to various financial services provided by the system. The Federal Reserve has several important functions, all aimed at promoting a stable and prosperous U.S. economy. The Fed's most well-known function is the formulation and implementation of monetary policy, which involves influencing the availability and cost of money and credit in the economy. The primary objective of monetary policy is to achieve maximum employment, stable prices, and moderate long-term interest rates. The Fed uses a variety of tools to conduct monetary policy, including open market operations, setting the federal funds rate, and adjusting reserve requirements. Furthermore, the Fed plays a crucial role in supervising and regulating banks and other financial institutions, ensuring that they operate in a safe and sound manner. This involves setting and enforcing capital and liquidity requirements, conducting regular examinations of banks, and taking corrective actions when necessary. The Fed is also responsible for promoting the stability of the financial system by monitoring and addressing risks that could lead to financial crises. This involves identifying potential vulnerabilities in the system, implementing policies to mitigate these risks, and working with other regulators to promote a robust financial infrastructure. Finally, the Fed plays a vital role in the nation's payment systems by providing financial services to depository institutions, such as check clearing, electronic funds transfers, and the distribution of currency and coins. The Fed also works to ensure the safety and efficiency of these systems, promoting innovations and improvements where necessary. The Federal Reserve conducts extensive research on the U.S. and global economies, collecting and analyzing economic data to inform its monetary policy decisions. This research helps the Fed understand economic trends, identify potential risks, and develop effective policy responses. The Fed also shares its research and data with the public, contributing to broader economic knowledge and understanding. Clearly, the Federal Reserve's actions have far-reaching consequences for the U.S. economy. Their actions affect everything from interest rates and inflation to employment and economic growth. Let's explore exactly how the Fed does it. By setting the federal funds rate, which is the interest rate at which banks lend to each other overnight, the Fed influences the overall level of interest rates in the economy. Changes in the federal funds rate can affect the interest rates on various financial products, such as mortgages, credit cards, and business loans, influencing borrowing and investment decisions by households and businesses. Typically, the higher the federal funds rate, the higher the rates across consumer products that we all use. Regarding inflation, the Fed aims to maintain stable prices, targeting an annual inflation rate of 2%. By adjusting monetary policy, the Fed can influence the rate of inflation, ensuring that it remains within the desired range. Stable inflation is essential for promoting economic growth and maintaining public confidence in the currency. One of the Fed's key objectives is to achieve maximum employment, which means providing the greatest number of job opportunities for the U.S. workforce while keeping inflation stable. Through its monetary policy actions, the Fed can influence the level of employment by affecting demand for goods and services, as well as the cost of borrowing for businesses. By promoting stable prices, maximum employment, and a well-functioning financial system, the Federal Reserve helps create the conditions necessary for sustainable economic growth. Its actions can either stimulate or restrain economic activity, depending on the state of the economy and the desired policy objectives. With great power comes great responsibility, and the Fed has had its share of criticisms and controversies. For example, the Federal Reserve is designed to be an independent institution, free from political interference in its decision-making. However, some argue that this independence undermines democratic accountability, as the Fed's actions can have significant consequences for the economy without direct oversight by elected officials. The Fed has made efforts to increase transparency in its operations and decision-making, but some critics argue that it remains too secretive and should be subject to more stringent public scrutiny. In addition, some critics question the effectiveness of the Fed's monetary policy tools, arguing that they may not always have the desired impact on the economy, or that they can contribute to financial instability and income inequality. And the Federal Reserve's dual mandate of promoting maximum employment and stable prices has been criticized by some who believe that it creates conflicting objectives, making it difficult for the Fed to achieve both goals simultaneously. So there you have it. In this video, we have explored the history, structure, and functions of the United States Federal Reserve, as well as its impact on the U.S. economy. As the central banking system of the United States, the Fed plays a crucial role in maintaining financial stability, promoting economic growth, and fostering a strong and prosperous economy. While the Federal Reserve is not without its controversies and criticisms, its importance in the world of finance and economics cannot be understated. By understanding the intricacies of the Fed and its role in our economic system, we can appreciate the complex challenges faced by central bankers and the significance of their decisions on our everyday lives. Thank you for joining us on this journey into the world of the United States Federal Reserve. If you found this video informative and engaging, please like, share, and subscribe to How It Works for more insightful content. We look forward to seeing you in our next video.